This might be a bit of an abbreviated version of our usual Pulse News here, but there was 3 stories that came out today I just wanted to sort of get on top of and share with you. I want to start things off with Royal Bank of Canada, and they are shaking things up. They announced today that they are reorganizing their leadership, and most importantly here, they're splitting up their largest division into 2 separate units. And this is now one of the sort of the biggest changes that has been made since Dave McKay took over as CEO about a decade or so ago. So the main change here, Neil McLaughlin, who has led the personal and commercial banking divisions, so P&C, he is moving over to wealth management, and Doug Guzman, the current head, is going to become deputy chair. Also, the P&C unit, that will be divided into 2 pieces, with Erica Nielsen taking over the personal banking and Sean Amato Gauchi going to start leading the commercial side. These changes will be effective as of September 1st. So these are big, and they come in the wake of RBC's recent expansions, most notably their acquisition of HSBC's Canadian division earlier this year. And that move added 4,000 employees to the company with more than 100 branches. Now, McKay, so he has been RBC's CEO since 2014, as I mentioned. He, of course, expressed enthusiasm for working with the new leaders. And he says, "I'm personally energized by the opportunity to work with these extraordinary leaders in the coming years as they take on new roles and responsibilities in our group executive leadership team." McLaughlin's new role in the wealth management division, that's noteworthy because that division oversees City National, which is a Los Angeles-based bank that RBC acquired back in 2015. And it has faced recently some regulatory and profitability issues, so they're putting some focus on that. Now, John Aiken, he's an analyst with Jefferies Financial, and he noted that Neil ran the Canadian operations. Now he's heading up the wealth management operations, which is essentially their U.S. platform, and it definitely bolsters his resume. RBC is also going to be strengthening the leadership team with other areas here. Jennifer Publicover, who leads the insurance business, now will be promoted to a group head role, and this will boost the number of women in the leadership team, along with Nielsen, as I mentioned a minute ago. And after the high-profile firing of former CFO Nadine Ahn back in April due to a conduct violation, Catherine Gibson will remain as the interim CFO. Also in the news today, the U.S. CPI numbers were out, and the inflation there continues to slow, and this just might create a little bit of potential for the Federal Reserve to lower interest rates, possibly sooner rather than later. The CPI rose by 3% in June when you compare it from the previous year, and that is down from 3.3% that we saw in May. Notably, prices fell 0.1% only from May to June, but that's the first monthly decline since May of 2020. So this slowdown in inflation, it does increase the likelihood that the Fed might cut rates in September, and that is a move obviously that would affect mortgages, it would impact credit card payments, the overall economic activity. And in recent commentary, Fed Chair Jerome Powell, he's emphasized the need for more positive inflation data before he's willing to make any changes. He mentioned more good data is necessary before they look to reduce rates. Now, with June's inflation report, which shows core inflation, which excludes food and energy, rose just 0.1% from May to June. So that could be more encouraging data for Powell that he's looking for before they do make any moves on rates. Now, with this most recent report, gasoline prices, they dropped by 3.8%. Used vehicle prices dropped by 1.5%. Shelter costs saw a modest increase of 0.2%. There's definitely an improvement there. Now, all that said, the Fed isn't expected to announce a rate change in its upcoming meeting, which is July 31st, will be their next meeting. But the pressure to cut rates is growing as the labor market, it started to show signs of slowing. Most recent unemployment numbers, we saw the unemployment rate rise to 4.1%. That's the highest since February of 2018, aside from the pandemic surge that we saw, of course, back in 2020. The current federal funds rate is 5.5%. That's the highest that it's been since the 2008 financial crisis. We've seen inflation drop from a peak of 9.1% back in June of 2022 to the current 3%-ish. Now, Powell noted that while there is modest progress towards the Fed's inflation rate, the risk of inflation picking up again still remains there, but low. Looking for a balanced investment solution that could offer both cash flow and growth potential? Consider the BMO Balanced ETF, and this is a fund that invests in a diversified investment portfolio of global equity and fixed income ETFs. The BMO Balanced ETF, it adjusts its current asset allocation quarterly to maintain optimal exposure to different market segments. So whether you are looking for broad market exposure, maybe low-cost diversification, or professional management, the BMO Balanced ETF can help you achieve your financial goals. Learn more about the BMO Balanced ETF today and see how that can fit into your portfolio. Visit BMOETFs.com today and find out more. It had to happen. Costco is raising its membership fees for the first time now since 2017. Starting September 1st, the cost for a basic membership will increase around 8%. It's going from $60 US up to $65, and the premium membership will go from $120 currently up to $130. And this change is expected to impact around 52 million members in both the US and Canada. Now, following the announcement, initially Costco shares were up around 2.5% in extended trading, but last time I looked here, they were actually down around 3.8% as the day has moved along. The stock has already risen just shy of 30%, around 29% or so this year alone, and it's outpacing the S&P 500 index. Now, from a fee change perspective, Costco has typically increased its membership fees every 5 years, and analysts had been they're anticipating this rate hike, especially considering the company's executives had sort of hinted at that during a recent earnings call. As is usually the case, it's not expected that this fee hike will have a material effect on its very loyal customer base. When we look back at previous rate hikes, the membership rate has remained very consistent. Sam's Club, which is owned by Walmart, also increased its fees back in 2022. And in this case, Costco's move is seen as a strategy to keep up with this competitive landscape and continue attracting the customers who are looking for bulk deals. If you aren't already subscribed to our Pulse newsletter, I'm going to make that super duper easy for you. I'm going to put a link in the description. Thank you so much for watching this video. We'll see you again soon.